big week for the stock market this past week. So we're going to go over the current readings of the market, and then we're going to get into this week's operating plan. What are we going to do this week? So first things first, whenever we look at the current state of the market, we want to know, is momentum positive or is it negative? It is positive. The S&P 500 is greatly outpacing the MSCI All World ex-USA Index and short-term treasuries. It was not only the close of the week, but also, of course, the close of the month. So we got a couple more readings to look at. Number one is the style as far as the large caps versus small caps. Right now, small caps are outperforming large caps, and so that's where we want to focus. Secondly is growth versus value. Growth is outpacing value on a 12-month basis, and so we want to be focused there as well. So overall, momentum still looks really good for the U.S. markets, and so all that we want to continue to focus in the U.S. markets. When we add all this stuff up together, we get a barometer which tells us, do we want to be in a risk on or a risk off stance? We want to be in a risk on stance. Looks pretty positive. The U.S. equities look pretty good right here. And so now we got that. Let's jump into the chart of the S&P 500 and let's look at a little bit more on a granular basis right here. There are two things that I really want to point out to this chart. Number one, you can see last week we broke out of this large trading range that we were in. So the S&P finished up 0.93% for the week, broke out of the trading range. That is good for the bulls. That's exactly what they wanted to see. Now the second and third thing, they fall into the same category. Notice how it broke out right here. We had this gap in price. So there are essentially two different types of gaps. There are continuation and there are reversal. We don't know if this is an exhaustive gap, which would be a reversal gap, or we don't know if it's a continuation. But that's what we're going to be looking for this week. So we're going to see if, in fact, prices do drift back down into the trading range, or if they can continue higher to the upside. So that's what we'll be looking for this week. Last week with the bullish price action, we got involved in the technology sector. So we're getting our toes wet there, and we'll continue to watch that. Secondly, our international position, it's barely holding on. We're so close to getting stopped out on it. Last week, the price action was really good on just about everything, and then towards the end of the week, it really just started to fall off. And so we haven't got stopped out of our international position yet, but we're pretty darn close. And that's pretty much the same for our treasury position as well. So it's just hanging down there at the bottom of the range, and we don't know if it's going to bounce to the upside right here, or if in fact it's going to roll over. So it looks okay, but we're pretty close to getting stopped out of those two positions. All the commodities basically flat for the week that we're involved in. Didn't really move around a lot, just chopping around again in their range. And then thirdly, or lastly, the U.S. equities, all those look pretty good. So we're seeing really good bullish price action on the U.S. equities right now, and it doesn't mean that we're not going to have a Ricky rollover right here, or we're not at the top of the market and it's just going to turn around. Now I don't know if that's going to be the case, but we're watching it closely. This week, if in fact prices do go up, we could adjust some stop losses up, and then of course we're going to continue to watch the positions that we have, and if we do get stopped out or hit a stop range in some of those, then we'll get out of those, our weaker positions. So with that, hope you have a great Labor Day, and we'll talk to you next time.